Hello and welcome to the Drum's Agencies for Growth Festival. I'm Charlotte McElhenney, publisher APAC of The Drum, and I'm very excited to dive into the trends and happenings of the M&A sector in our industry. Now, we couldn't have pulled together a better panel for this discussion, as they're not only experts, but very much active in this space as we speak. So first of all, I have Hattie Marsden, Director, SI Global Partners. We also have Scott Spirit, Chief Growth Officer, Executive Director, S4 Capital, and Vuki Vujasinovic, CEO, Sling & Stone. Welcome, guys, and thanks for joining. I hope I said the names right, but apologies if I did not.
And good to be here. Thank you for having us.
Thanks for coming. Now, for those of you who don't know, Hattie and SI Partners are very much experts in this field, and they consult across many of the deals you'll have read about. Scott represents probably one of the most prolific buyers of the moment in S4 in our industry, who are on an incredible growth trajectory. And Vuki deserves to be sipping champagne as we speak, as he's just sold his business. Now, it's been a bit of a tough year, I think, generally for agencies. So against this, how has the M&A market changed over this time, if at all? And Hattie, I'll go to you first on that.
Great, and thanks for having us here today, Charlotte. So I think there's probably, and I'm just going to look really macro at the moment, there's two key things that we've seen have evolved quite a lot over the past 18 months. The first is kind of volumes, and the second is process. So in terms of volumes, 2021, it really is a cracking year. I think anyone that's working in the M&A industry is working quite hard at the moment and desperately trying to recruit, because actually the total deal volumes are up. So as of August, they were up around 24%. That's a global trend. So actually, when we look a bit more specifically at the agency sector, it's really reflected also. And what we've seen, though, is that it's been a little bit more binary in terms of the targets that people are really trying to acquire. In that if you performed really well during COVID, lots of people are trying to get access to them, whereas those that were perhaps struggling a little bit to keep growing are less interesting. So I'd say there's definitely an increase in volume. And then on the process side, what's been quite interesting, and I don't think anyone would have expected this 18 months ago, is that actually the need to work virtually has had the opposite effect and actually sped up the deal-making process. So particularly for cross-border deals, Vuki's a good example of this. A team in Australia, headquarters in London, whereas perhaps 18 months ago it would have been unthinkable for people to do deals with people they hadn't actually met face to face. Instead, people are making do with virtual meetings, and that's actually sped up the process a bit because it's meant that people haven't had to fly around the other side of the world.
Very interesting. And Scott, what's your perspective on this?
Yeah, well, thanks for having me first. I'd very much agree with what Hattie said. I think I'd slightly push back on your introduction about it being a tough year or tough couple of years for agencies. I think it depends on the agency. So I think a lot of attention gets put on the holding companies because they're public and they have to release their figures. And the reality is they've been having tough years since sort of 2016 or 17. I think when you look at some of the smaller, more focused agencies, more digital agencies, actually the past couple of years have been really, pretty good and some great growth. And I know, Vuki's agency has done very well in the past couple of years, and certainly S4's been on a pretty good growth track. And to be honest, I see a lot of inbound deal flow. I see probably 2 or 3 agencies a day. And the vast majority of them, relatively small, but growing at 20–30% over the past couple of years. So I think there's almost 2 speeds in the industry, and probably too much attention gets put on the slow growth of the big players and not enough attention on the fast growth of some of the smaller, more innovative players. But in terms of what's changed on M&A, I totally agree with Hattie on the process thing. I mean, it was a bit weird when the world ground to a halt sort of March, April last year. We had quite a full pipeline and we were a bit nervous about, should we carry on? Should we do these deals? We've not met any of these people. And, normally I spend 70% of my time flying around the world meeting people and getting involved in that due diligence. And once we got the first deal done in this new kind of virtual world, then as Hattie said, we got really comfortable with it. Things sped up. It actually helps, I think, speed up the due diligence process because you're not relying on people's travel schedules. And we realized that actually doing deals over Zoom was pretty efficient. So we've cracked on and got plenty done. I think The other thing I would say from a change perspective is the change in the sort of competitive nature of who's doing deals. So I think in the, a few years back, it was usually sort of Dentsu or WPP sort of fighting it out for kind of the most aggressive deal makers. The holding companies have pretty much disappeared from the scene, and it's really now more, I guess, independent companies. We see a lot of private equity activity in the industry, which is relatively new. So certainly either private equity going directly into agencies or agencies that are owned by private equity doing deals and doing roll-ups. And then we see the consulting companies pretty active as well, particularly Accenture Interactive. So I think, as Hattie said, deal flow's up, but it's coming from different places. Still an exciting time to be, I think, either buying or potentially selling or merging your agency.
Absolutely. I think we'll come back to some of the kind of trends in terms of the who's buying a bit later, but I want to dig into the point that you just brought up is that, some agencies are actually doing, very, very well in this context. And I want to just understand, what the personality traits, what's going into that and what's kind of attractive, to buy at the moment. Scott, I'll get you to dig into that one first.
Yeah, I mean, I guess the obvious response is digital, because, I think there's been a 10-year or even longer trend of client spend moving away from traditional advertising and media into digital. So that's nothing new. But it was probably sped up by COVID. I think everybody's behavior patterns changed. Everyone's lives became much more digital. We're not doing this panel in what we would, I'm sure, love to do, a live environment. We're doing it on Zoom, and all our shopping's gone to e-commerce, etc. So that really gave, I think, a few extra years of growth in 2020 to the digital industry, and so it's really focused people's minds on specific capabilities. I mean, I think from our perspective, we've laid out our strategy and our service offering pretty clearly around data, around content, around digital media, and actually today we're announcing a deal in technology services. So those are the 4 areas that are really important to us, and there are lots of great opportunities out there. There's some great companies that have been quietly building away over the past 3 or 4 years, who had a big jump in activity last year, and are now looking, I think, I'm curious to hear from Vuki what was driving his decision, but I think a lot of the entrepreneurs I speak to, they've sort of done really well. They don't need to sell their agency, but they're sort of ambitious about what the next level of growth is. And I think looking at who you can partner with to achieve that growth is a really exciting time for entrepreneurs. And I think the fact now that, in the old days, you had one exit route, which was a holding company, and now you have multiple different exit routes, whether you can take investment, you can come join an S4, you can join a private equity driven group, a consulting company, or you still have that holding company option. I think that's really opened entrepreneurs' eyes as to, what the future can hold for them. So it's exciting.
Yeah, absolutely. Hattie, do you agree? What are the common traits that you're seeing within the deals that you're doing?
Yeah, I completely agree with Scott from a capability perspective. I guess sort of just another lens and way to think about, the question you're asking in terms of what are the common traits is a really basic one, and it's just talent. So actually one of the really key things that's just driving those that are performing really well is the fact that they're managing to attract, train and retain really high performing talent. And talent is such a tough one in the market at the moment. Post-COVID, we're seeing, I think, what's definitely a lot more of a dynamic talent market. Certain media sort of talking about the mass resignation trends. Not sure I'd argue it's quite there yet, but there's definitely a lot more movement between people moving across agencies or actually just out of the industry altogether. And certainly in markets, Vuki's in Australia, the challenge is even more extreme at the moment because the borders are shut. So what it's meaning is that people are just really struggling to get in, particularly mid-level talent. So what we're seeing actually is that, yes, access to certain capabilities is really key, but underneath that, what is it people are trying to access? They're trying to access the talent with those capabilities and the organizations that are managing to really hold on to those. So yeah, definitely a differentiator.
And Vicky, let's dive into the deal then.
Yeah.
Not only congratulations, but I think we're just curious to hear a little bit more. So how have you found the process?
Yeah, really good. And I guess I'll answer by also answering what Scott posed to me just before as well, which was the breadth of conversations we have. Certainly, if I had done this a few years ago, I imagine I would have been speaking to 4 or 5 parties, but definitely going through it, there were much wider conversations that I probably would have anticipated in terms of, you know, who they were had with and the different options that opened up. I thought it was a great process. I really enjoyed it. I think as a founder of a company, you know, it's 11 years now, but definitely sort of at the 10-year mark last year, we had had a really great run and continue to do so. But it was a real moment of reflection for me, of thinking back and, you know, being proud of what we'd achieved, but really at that point, probably for the first time, thinking about the next 10 years. And I think most entrepreneurs are pretty, you know, very often heads down like that. And it's actually, I found it, and I know others find it hard to pull out of that mode and sort of get off the treadmill, so to speak. And to keep going with the cliches, it was really good to like stop, pause, and almost like zoom out and have that 30,000 foot view of the business and how we fit into the industry and the sector and the impact we're having. And when I thought about what we could do in the next 10 years, I could certainly see, you know, we had a strategy and I could see our own growth path, but we didn't have any external backing or capital, or, you know, we were bootstrapped and self-funded. So certainly that made starting to look at this option really attractive. Running a business is like getting an MBA anyway. I didn't go to business school, but it's certainly after 10, 11 years of doing it, I feel like I've ticked that box. But going through this process is almost like getting a different kind of MBA. I feel like it's the business skills and what you learn going through it is pretty incredible. So I think I might have freaked out Hattie and the team a bit at times about how involved I got, but I was, you know, quite in it and enjoying it and kind of soaking it all up.
And how did you prepare, you know, as a business and even personally for this?
Yeah, because it's like, it's your baby, right? Like it's interesting. First is you get great advisors, obviously. So that's really important. I have spoken to other entrepreneurs and other founders who, you know, decide to go this route, go it alone. And I understand why they do it, but when you've never done it before, I think you don't know what you don't know. So getting great advisors is really key. I also always, without any intention of going down this path until very recently, literally until the last year, but even for the prior 10 years, I always ran the business like it was going to be sold one day. And it was not a plan, but running the business in that way, I think is really smart. So how that plays out is in little, like very pragmatic and practical ways. For the first many, many years of running the business, I was driving around in a Mazda. And I'd see other founders of agencies driving around in much, much nicer cars. Their agencies weren't doing 5 times better than me, but their car was 5 times better than mine. And I'd ask them how things are going. And they'd say, oh, you know, running the car through the business, it's a tax write-off, it's this or that. And in that moment, I realized I didn't want to be going through this process one day and showing someone our business and opening the books and saying, oh, yeah, that car, that's a tax write-off. Like, I think running the business in a more mature way than sometimes people tend to do in those early days was really good. So I guess, like, I'd say, in a way, always be preparing, right? And the last thing is, I think if you're running an agency, you tend to get very, very good and very sharp at talking up your agency to potential talent and to potential clients. It's very natural. It's something you do every day. But talking about the agency to potential growth partners or acquirers is very different. And so, like, sharpening that up is a really critical way to prepare. It's not the same conversation.
Amazing. I think they're quite useful tips there for anyone who's kind of, you know, slightly behind where you've been in that process. Did anything surprise you about the process? Did anything come? I mean, you sound pretty prepared, but did anything come up that you didn't expect?
Yeah, that's because I'm at the other end now. So we announced yesterday, so I'm very happy. And you know, it's like we're now into the start of our new chapter. So really excited about that. But yeah, there were. I mean, I shouldn't have been surprised. About specifically this, because we've helped hundreds of clients over the years announce big funding rounds. We have a lot of tech clients, and they're raising, you know, millions and billions of dollars. And always those founders after we're announcing it are like, oh, thank God I can get back to running the business now. And I never quite, I'm like, what do you mean? You just raised $100 million. It can't have been that pain. Like, that's incredible. Congratulations. You should be proud. And they're like, no, it's like, it was distracting. And so it shouldn't have surprised me, but not only the obvious time consuming aspect of it, it does even if the deals are quicker, which I have no doubt is correct, it still takes time as the founder going through this. And it wasn't just about that though, it was the mental headspace. So I personally found that surprising, the mental headspace it took. Or I probably shouldn't have been surprised, but I think I was. And weirdly, I sitting here now, I find myself surprised that I enjoyed it. That I learned a lot, that I found it enjoyable, that the caliber and the types of conversations you have going through something like this is quite incredible. And yeah, like I enjoyed it, which people say is weird. So I think that's a little bit surprising. But last is that I think it helps you run your business better as well. It forces bigger thinking, it forces more strategic thinking, it forces clarity in thought and planning that sometimes when you're independent or bootstrapped or don't have other powers to answer to, which is, my situation and I'm sure a lot of other founders, this kind of process really forces that next level of thinking, I think, and that surprised me and it was enjoyable.
Absolutely. I'm going to dive back into the buying side of this now. We actually touched on this earlier. Scott brought up some of this, but I want to get Hattie's perspective on this. What's changed in terms of the people who are buying? As Scott says, it seems to be different types of players. What's the trends that you've seen there?
Yeah, so some trends are still the same. S4, Accenture, still highly acquisitive, great buyers. We always like having conversations with them because they've got such great clarity on what they're trying to buy. But I'd also entirely agree with Scott in terms of private equity being probably the biggest large-scale trend shift over the past 24 months. So private equity, it definitely was paying more attention to marketing services pre-COVID, but that trend has massively increased. So it's something like 40% of deals done year to date have been done by PE. That's a global trend. But pretty much every PE house that we speak to that has an interest in marketing services, the difference is they've gone out and raised new funds in the past 24 months. So they're all sat on these big piles of cash that they really need to deploy. And a lot of them are looking at similar size, scaled assets in which to invest. So it's definitely brought a bit more sort of competitive tension to some of this process. And what we're seeing is two things. Yes, they're both directly investing into the scaled independents, but then in turn, those scaled independents are sat on cash, which they themselves need to deploy. So it's sort of having a ripple effect throughout the market. And what it means, and it's particularly interesting for APAC, where some of the, the independent agencies here, they tend to be a bit smaller than in Europe or the US, is it's opening up a new buyer pool that will consider them, even though they're at a slightly smaller scale than perhaps what typically we would have advised agencies they needed to get to in terms of scale. It's really just sort of robustly building out the market, both at the bottom end and at the top end.
Very interesting to hear how that's impacting the size of agencies, actually, because I've heard before that's been a challenge, particularly in hot markets, that maybe have smaller businesses within them. Scott, I just want to come back to you on your trends in terms of how you're growing and what you're looking for. You mentioned digital earlier. Are there sort of specific niches within that, or are there certain markets that you look to that are kind of hot markets at the moment? What trends specific to you are you seeing?
I think so. So I think everything we do at S4 has a digital aspect to it. I guess that's our kind of go-to-market. There are some specific capabilities that are pretty hot right now that we're seeing really good growth opportunities in. So the way we look at M&A, and we call them mergers, is much more around capability building. So we're not looking to buy scale or to simply add dollars to the top line. So we've sort of drawn out internally where we see our service offering going over the next few years, where the excitement is, and where perhaps we need to upscale our capabilities. So I think a lot of focus and attention around data. So that's a big word or a broad category, but anything around data engineering, data science, data analytics, data visualization, cloud sort of migration consulting, which is not typical kind of advertising stuff, but that's a really hot area and an area we're seeing massive growth and demand from clients in. So we've done quite a few deals over the past couple of years around sort of Google Analytics, Adobe Analytics, Salesforce, those kind of areas. So continuing that trend. E-commerce, has always been hot, I guess, but certainly COVID boosted that. Things, on the technical side around systems integration, around Magento or Salesforce Commerce, some of the big packages, but then really around strategy, performance media buying, how to drive sort of traffic through that funnel in the most efficient way, really important too. And then today we announced a deal with Zemoga, which is a technology services company. So this is a company, not really in the advertising industry. They compete with the likes of Globant or Accenture or Endava, and they help clients build digital products and services. So it's hardcore engineering skills that can take a product from an idea to a prototype to a fully blown kind of market launch. In a short period of time with a very agile kind of development approach. This is a company that has a large amount of people in Colombia, so that's where their technology base is, and then their client base is in the US. And I think that's something we're seeing a lot of trends around as well, this idea of nearshoring. I think with us all working from home in the past couple of years, we've realized that you don't need everybody in the place where the client is. And that you can take advantage of great pockets of talent anywhere in the world or anywhere in a country to service clients. So that's something we've had built into our DNA from day one from the Media.Monks business, but it's something we're increasingly seeing from an M&A perspective as well.
Yeah, absolutely. I'm going to move into almost the post-sale, I guess, part of this now. And Vicky, I'll chat to you first as you're about to sort of embark on this, but you're going from being an entrepreneur into being part of a sort of bigger business, I guess. How are you expecting things to change, particularly around things like culture?
Yeah, look, I mean, I think that was a big part of how I looked at the process, and what was really like a non-negotiable for us was an environment where we would get to protect, the culture and the secret sauce of what made us special when we were boutique and independent. And now as we enter a new scale, how we can, and we've done this ourselves, various steps along the way when we grew from 10 to 40 to 70 people, like at different steps, you kind of have to figure out what you really need to keep as you grow. And it's no different going through this, is making sure you get to work with people that value that and that want to keep that flame alight. So for us, it was pretty simple in that regard. When we had conversations where it was clear that culture wasn't as important, it wasn't right for us. So I think that's pretty key. And I think it really depends on the agency and the agency owner. They, if they are someone that wears their independence on their sleeve, and it's something that is like their rallying cry, then obviously they have a bit of a change ahead of them. But for us, what made us different, what made us special, is different things. It's about the types of clients we work with, and working with high growth tech businesses and disruptors, and both great unicorn companies, but also the unicorns of tomorrow. And we tend to get to know those clients really, really early on in their journey, and that's not going to change. So I think for every agency, it's figuring out what makes you special and different, and going into this process and knowing that, okay, well, these are the 2 or 3 things that are non-negotiables that we need to keep as part of this process. And then it becomes very easy to spot the conversations where that they would want to change that. And that's okay. Like, that's totally fine. Everyone has different levers or different things that they focus on. And so for us, it was pretty easy to pick out the things that were really critical to keep as part of this next chapter.
And Scott, what about being on the other side of this? I actually thought it was interesting that you said we just call it mergers. Is that, I guess that's in a nod to kind of how you integrate businesses. How do you see this change happening kind of post-purchase?
Yeah, I totally agree with everything Vicky just said. The importance of that is almost paramount, I think, because at the end of the day, if you've got a good business, you're going to get a good valuation, and probably not a massive difference in terms of valuation from, there'll be several people that are interested and maybe different deal structures, but at the end of the day, it's not going to be one paying 3 times more than the other. So at the end of the day, I think, the culture and the confidence of the entrepreneur that they're doing the right thing for them and for their people and their clients is far more important. So yeah, we call them mergers, and it's not semantics. It's the structure of our deals are very different from pretty much anyone else I'm aware of in the industry. So, we're I guess in one sense unapologetic about what we're building. So we're very clear that we're building a unified structure. We spent many years working in completely non-unified structures and are well aware of all the kind of pitfalls there. And from day one, we wanted to build something different at S4. So we have this unified brand, unified structure. We're building one company. So for some entrepreneurs that, that's not what they want, and that's fine. And we're probably not the right partner for them. But from a deal structure perspective, we're looking for entrepreneurs to buy into and believe in what we're building and really want to be part of that. So our deal structure is half cash, half stock. So, I guess the cash component is in some sense a de-risking for the entrepreneur. It allows them to, they've built a successful company. I think all entrepreneurs, by definition, worry it's all going to fall apart the next day, right? So that they can take some of that off the table, enjoy the reward of having been successful. But essentially, the merger part is they're then rolling over the other half of the company into S4 equity and believing that they will be able to influence the performance of S4 and get behind the kind of their peers and colleagues at S4 and work together in a very collaborative way to drive the overall performance of the firm. So it's a completely different approach. We don't do earnouts. We don't sort of put companies in silos. Everybody's coming together and joining a very entrepreneurial management team and taking responsibility for driving it forward.
Yeah, absolutely. And seeing some of your recent financial results, I guess that's quite an appealing feel, actually. And Hattie, I'll just to end off, you see both sides of the equation on this. What are some of the common kind of success stories or implementations of kind of bringing two businesses together that you've seen?
Yeah, it links quite well actually to what Scott was just explaining, because really one of the key things to making sure that people have a successful integration is that actually whatever deal model they've agreed to lines up and is going to drive the same behaviors that the integration strategy is looking for. So, we've had a great example from Scott. The S4 team are looking to really quickly get people integrated and playing as one team. So there's no separate earn-out based off sort of ring-fence performance targets. What we are seeing actually is, not quite that S4 model, but we are seeing more and more acquirers that are still having some form of earn-out. They're perhaps shorter than in the past, but actually those earn-outs are linked to softer metrics like talent retention. Because again, the rationale that they're trying to do is they're trying to get people to stick around and play nice together and integrate the commercial offering rather than operating as perhaps, slightly separate businesses. So yeah, absolutely key is to work out what does post-deal look like, what is that strategy, and then get people incentivized to deliver on that. I'd say the second thing really is really simple, and it's just a bit of preparation and actually thinking about the integration prior to closing the deal. And I know that sounds ridiculously obvious, but it's amazing, Vuki referenced to it earlier, how much of a heavy, all-consuming process these processes can be, particularly for the entrepreneurs. Not only are you trying to run your business the best possible because you really want to show that performance is great. We quite often say to people, that's the best thing you can do during this process, just continue to grow your business like you have been doing. They're also trying to get through the complexities of understanding all the deal negotiation. And then we say to them as well, actually, stop, and we need to think a little bit more deeply around what the integration is going to look like. So that doesn't necessarily mean that everything needs to be solved and there's an agreement on what every employment contract is going to look like, but at least having some high level principles in place before you sign that bit of paper, which might be actually we'll do nothing for 6 months, we'll just settle down and then build a strategy, it is really key.
I think that's some really nice bits of advice to finish on, and that's all we've got time for. So I just want to thank all of you very, very much for being part of our panel today. Really appreciate it. Lots of tips shared, so I'm sure the audience appreciate that. And thank you to everybody who tuned in today. Do be sure to watch more sessions on the Agencies for Growth website.
Thanks, Charlotte.